G'day guys, Nathan here from Hunter Galloway. I'd like to share my perspective of the current state of the Australian property market and where I see it going. Despite the series of recent interest rate hikes, the Australian property market has demonstrated a considerable resilience. I attribute this to the enduring imbalance between supply and demand, with demand far exceeding the current supply of properties. This has driven up home values across major capital cities, an indication that these rate hikes haven't greatly dampened buyers' enthusiasm. As it stands, Sydney has seen the highest growth, followed by Brisbane and Melbourne. This reinforces the notion that long-term factors such as supply and demand continues to dictate the direction of home values. As a mortgage broker working with clients right around Australia, we've seen this firsthand. Despite the anticipation of further rate hikes, I believe that we're close to reaching the peak of the interest rate cycle. This should bring some relief for home buyers, as stabilizing or decreasing rates might make it easier to afford home loans. However, the future trajectory of property values in the market is heavily dependent on the balance of supply and demand. Current indicators suggest that the supply of new properties entering the market will remain low for some time, while demand for housing continues to be supported by solid fundamentals, such as population growth and a resilient job market. On the flip side, predictions of a downturn in house prices can't be ignored entirely, and a risk of a recession, coupled with the decline in consumer confidence and slowing building construction, could exert downwards pressure on property prices. We also can't rule out how an increase in migration coupled with a lack of construction might counteract the decline in confidence in a recession. This is something prospective home buyers need to keep in mind and factor in their future plans. Personally, I'd advise home buyers to closely watch economic factors such as job advertisements, consumer confidence, migration, and construction rates. If we manage to avoid a recession, and as the long-term imbalance between supply and demand continues, it's likely that we'll see continued growth in the property market, albeit slower. When it comes to navigating these uncertain times, the key is to stay informed, do your research, and take advantage of the help available to you. As a mortgage broker, I'm here to assist you in understanding the intricacies in the housing market and help you make an informed decision that aligns to your financial goals. The current challenges present unique opportunities for those that are prepared and have a clear understanding about their financial position. We've seen urban property prices across the 8 capital cities in Australia conclude the financial year on a high note, reflecting the resilience of the property market in the face of a series of rate hikes. Despite 12 instances of rate increases we've seen over the last 13 months, this financial year has seen 3.3% surge across various capital cities, and this is primarily due to the persistent imbalance between supply and demand. Among all capital cities, Sydney reported the highest values and gains, with an increase of 4.9% over the financial year. This was followed by Brisbane and Melbourne, which saw a 3% to 1.7% rise respectively. The imbalance between supply and demand is projected to continue to dominate until the Reserve Bank of Australia initiates rate cuts next year. Projections of robust population growth, a strong job market, and steady household balance sheets continue to support these projections. And if you do find value in this video, please consider doing me a little bit of a favor and hitting that subscribe button, as it does really help out the channel. And a big thank you to all our subscribers for your support. Inspires us to create more content. We hope you enjoy. However, there is a decline in houses being built at the moment, and this trend isn't anticipated to reverse in the near future, so a drop in house prices this calendar year isn't really expected. Nevertheless, it should be noted that despite the slight uptick in capital city prices, national home values saw a marginal decline of 0.11%. This was factored in by regional shifts over the previous year. Even so, the median price across combined capital cities grew by 0.41% last month alone. This is a positive sign in defiance of initial forecasts of a significant depreciation in property prices due to soaring interest rates. According to PropTrack's expert analysts, the upwards trajectory in property prices is predicted to continue to persist throughout this year alone. Even though interest rates are expected to pose a challenge, the peak in interest rates seems to be nearing. Additionally, the supply of new properties entering into the market is limited, while demand for housing is supported by strong fundamentals. Conversely, some experts are actually predicting a downwards trend in home values due to the surprise interest rate rise last month and the anticipation for further more. These analysts warn that there's a possibility of a double downturn in housing market and potential recession for the economy, sparked by forced home sales. Consumer confidence is reported reportedly falling, job advertisements are slightly down, and there is a significant drop in construction of new properties. If these trends lead to a recession and increased unemployment, a subsequent fall in house values is a distinct possibility. Despite the overall number of properties listed on realestate.com showing an improvement compared to the same time last year, the supply of new properties coming onto the market remains suppressed. This limited supply contributes to the heightened competition among the available properties for sale. The competitive nature of the housing market is exemplified by recent home buyers who have experienced the challenges of purchasing in an environment where buyers are outnumbering the number of listings available. Homes are being purchased at higher prices than their estimated worth due to the scarcity of available properties. AMP's chief economist predicts that interest rates will rise 2 more times, which will make a peak cash rate of 4.6% this year, potentially driving the economy into a recession. If a recession is avoided, it's anticipated that home prices will continue to increase, albeit at a slower rate. Recent data from CoreLogic indicates a minor slowdown in the growth rate of Sydney, Melbourne, and Brisbane home values. This could signal a shift in home buyer sentiment due to the latest interest rate hike and expectations of furthermore in the future. The housing market will be closely watched over the next 6 months as households feel the full impact of the rate hiking cycle, which could result in a decreased sentiment. Whether this will lead to a decrease in house prices remains uncertain due to the continued shortage of homes for sale. New home listings have been consistently below the 5-year average since the previous year. The low stock available has been a significant factor to contributing to the home values. Current city listings are 26% below their previous 5-year average, and regional listings are down by 33%. Small capital cities have demonstrated strong performance, with property values escalating over 5% in Perth and Adelaide over the past year, bringing prices back to peak levels. Sydney has also observed an annual increase of nearly 1%, with growth of 0.63% noted last month. Although Brisbane saw a modest increase in June, this growth pushed it to a positive annual growth. Meanwhile, ACT and Melbourne observed a 0.11% and 0.24% respective rise in June alone. Despite these increases in June, these cities continue to be about 3% cheaper than last year. On the other hand, Hobart and Darwin were the only capital cities to observe a dip in prices in June, with a reduction of 0.36% and a 0.08% respectively. In particular, Hobart, after having several robust years, has seen prices slide below their peak of 7.5% in the last 12 months alone. And remember to like, share, and subscribe to stay informed with all the latest property and finance news. The primary reason for the recent increase in house prices is the stark gap between the available of homes available for sale and the demand for them. This imbalance is likely to persist and will be a crucial factor in determining the future housing market. While there are challenges ahead, the Australian property market remains robust. I'm optimistic that we will be able to navigate these headwinds, and there are opportunities for home buyers out there, even amidst the fluctuations that are expected. Here at Hunter Galloway, we work with home buyers right around Australia. If you're looking for assistance, we can help. There's no cost for our service. We're a mortgage broker that can assist with people Australia-wide. Give us a call on 1300 088 065 or visit our website, huntergalloway.com.au. We'd love to get in touch. Guys, as always, thanks for watching, and we'll see you next time.